Our economy is said to be growing at a rate of about 5%. So every quarter, the Kenya Bureau of Statistics reports that the quarterly economic growth. So at a very high macroeconomic level, we're seeing an expansion of the economy. When we look at the reality on the ground, there seems to be some difference there, and we now try to bridge these differences. The economy consists of millions of consumers. They are making decisions every day about the goods and services that they are going to take up. The sentiments that they have on this can then be collated and used to drive decision making and to get some insights into the direction that the economy is headed. Our consumer index, therefore, looks to put together all these insights, and that's information that we'll be presenting to you this morning. The consumer sector, as quantified by the Bureau of Statistics under the private final consumption, is found to be about 3/4 of the GDP, and that's been a fairly consistent proportion of our economy. Therefore, we cannot be gainsaid the role that the consumer plays in driving economic growth. We note that there was a decline in private sector credit in April of about 7%. Nevertheless, the trend of the private sector credit has been upward since 2018. We're interested in credit and its expansion because consumption can be funded either from one's income or from borrowing. So we just know that in April there was a slowdown of about 7%. To our index, we designed the index to be as representative of the economy as can be. We've spoken to not less than 1,000 consumers and close to 200 retail businesses. This research has been done in 5 different economic hubs of the country, and these have been face-to-face interviews and questionnaires. Half of our respondents are in Nairobi, and 15% in Mombasa, 14.5 Kisumu, and Nakuru and Nyeri, just about 10% in each of them. The information that we've collated is also diverse. We have representation across the age groups, with demographics of 26 to 35 years being the majority of our respondents. We have representation in terms of gender, almost equal split between the males and ladies. We have representation across the income groups. We have close to 60% being manual laborers who are both skilled and unskilled. And as mentioned, we also have representation across different locations in the country. So our survey gets as close as possible to the overall population, and we find that really helps us get the correct insight onto the economy. The individual spending sub-index, we'll speak about that first, and we posed the question to the respondents to the interviews on the level of spending. So the question posed is, has there been a change in your level of spending? We find that 77% of the respondents responded that they've had an increase in their spending, this increase being on account of increase in the price of goods. 23% indicated that they have spent more on account of purchasing additional goods. The responses were mixed. We also find that there's a group of our respondents who affirmed that they have actually spent less, and that's about 70% of them had a decrease in that, and this was on account of buying fewer goods. This reduction in goods being purchased may be driven by substitution, where what you were using before, you've substituted to another product, and possibly also not spending at all. When we drive the insights on the income trends per sector, 52% of respondents across the industries said that there was no change in their income, and 31% said there was a decrease in their income, and only 17% recorded an increase in their income. Across the sectors, the manufacturing and trade sector had 29% of the respondents reporting that they had an increase in their income levels, with a shrinkage noted a lot highest in the sectors of wholesale and retail trade. The consumer behavior hasn't changed much in terms of how they fund their expenditure. 87% purchased the goods using their own income, and the balance 13% utilizing credit. The credit coming in various forms, mobile loans being 35% of the credit that they've accessed to purchase their finances. Local shop arrangements are about 22% of how they access credit, and the social networks that we belong to funding about 15% of goods that are consumed in the country. We pose the question on how the income that is being generated is being spent. Food and shelter is taking up the majority of the income that's being generated. More than 40% of the income was reported to be being consumed by food and shelter by 43% of our respondents. We looked at two other spending categories, leisure and entertainment, and traveling and holidays. And the respondents there said they're spending less than 10% of their income on that. There is close to 57% of respondents saying they're spending less than 10% of their income now on leisure and entertainment, and 53% spending less than 10% on travel or holidays. In terms of having excess income, disposable beyond the disposable income and money set aside for future savings, only 49% of respondents have been able to allocate 49% of the respondents allocated less than 10% of their income on savings and investment. That's informative for assessing the rate of capital formation in the country. The expectations that the consumers have for the coming quarter, that 85% of them anticipate that they shall spend more on essential commodities, and within that, about 15% are much more bullish that they will spend less in the third quarter. About a fifth of them will spend more on non-essential items, and 79% expect to spend less on non-essentials during that same period of time. With this expectation to spend more on essential items, there's preparations on how to cope in those circumstances, and we find 32% of the respondents expect to cut out non-essential spending. 20% of them will reduce the quantities of the essential spending. The expectation for some is also to bolster their income by looking for additional work. About 12% of our respondents expect and plan to boost their income by taking on additional jobs. Overall, the index on the individual segment has grown since our baseline period. Today, our index has a value of 148 points. This is an increase of about 48% from last year. The consumer spending has increased in that period of time. When looked at over the course of 2 quarters, there is a moderate increase of about 11% on the individual index. When assessed on the parameters of age and gender, we find that the ladies are driving spending in the economy. They've had the biggest expansion in spending. The age group of 26 to 35 years has shown the biggest increase in spending from our base period, growing by about 45% from the previous index. When we now consider the business segment of our index, as mentioned, we've spoken to close to 200 businesses. These businesses are across different sectors and also of various sizes. Small and medium-sized businesses consist of close to 79% of our respondents. That gets us as close as possible to the pulse of the business activity, and we find that sector-wise, majority of the businesses are restaurants, retail stores and restaurants, which consist of the majority of our respondents. The performance of the businesses has been 55% of them have reported a decline in sales, and 45% noting an increase. Of the respondents that we spoke to, we find that 82% of those in Nyeri said that they had a decline in their sales, 78% in Kisumu reporting the same. Respondents in Nairobi were almost equal, almost 48% saying that they had a decrease in the sales, or 50% saying that they had an increase in sales, so almost even in Nairobi. The sector that had the largest increase or a decrease in their sales was house and fittings. 80% of the businesses that are in that line reporting a decline in sales. Of these 55% of the respondents who are informing us that their businesses experienced a decline in sales in the second quarter, majority of them are saying that the decline is in the range of 6 to 20%, with the plot chart of the most common items being spent on being flour, sugar, oil, bread being also one of them, and in a very small way, alcoholic beverages. The businesses that we spoke to have also formulated expectations for the coming period. 45% of them anticipate an increase in their sales in the third quarter of the year, and 11% expect a decrease. It's interesting to note that 30% of businesses are uncertain about the direction of the future sales. It reflects the mood in the economy presently. And 41% of those businesses plan on mitigating the rise in the costs of their inputs by passing this on to their customers through an increase in the end price. 32% will seek to maintain their sales at the same price, the level of sales at the same price, by taking a lower profit margin on each of the unit sales. The business index has shown a decline from the base period. The index level is now 91 points. It's been static quarter on quarter. The first quarter of the year, which was the same, 91 points. The categorization according to size, we find that the small and micro businesses, which are the majority of the businesses today, are showing a decline in their sales, about a decline of about 65% in terms of the index level for each of those categories over the course of the quarter. The sectors are faring well. In the sectors that we've assessed, we find the house and fittings and accessories has seen the biggest shrinkage in terms of the index level from the previous quarter. So combining the two indices, the individual spending index at 148 points expanded about 11% in the second quarter of the year. The retail business index, about 91 points, has been flat, and our composite index, therefore, is now at 120 points. We've seen now that it's an increase of about 5.5%. That's a change in the second quarter for this year from the first quarter of this year. Our key findings is that our index, as mentioned, now is at 120 points. It's up 5.5%. The sub-index of individuals is what has driven consumption over the course of that quarter. The performance of the business index has been flat, and we find that half of the respondents are reporting that their income levels in the second quarter of this year have been lower. 20% of them are talking of a lower level of income in the last 12 months, compared to about 20% who have also shown an increase in that period of time. There's been a significant improvement in spending trends at the individual level. In the second quarter, the ladies remain the main drivers of expenditure and spending in the economy, with the age group of 26 to 35 years also supporting consumption in the economy. 87% of our respondents are spending their own income to make their purchases, and only 13% are relying on credit. We find that on the business segment, the overall business, retail business segment has been flat in the second quarter of 2024, with the house fittings and accessory sector witnessing the biggest, steepest decline in the sales trends.